Hi, everyone. In today's video podcast, we'll be answering the question, do locum physicians need to pay quarterly taxes or can they wait? Welcome to the Locum CPA Podcast, where I talk about the business of being a locum tenens medical professional. My name is Stephen Lee. I'm a certified public accountant based out of Chicago, Illinois, and today we're tackling a common question. Do you have to pay quarterly taxes if you hold off on taking a salary, or can you pay it all at the end of the year without penalty? Let's break it down. The first part is self-employment taxes. As a locums professional, you are also considered an independent contractor, right? And as an independent contractor, with most locum physicians the IRS considers you self-employed. That means you're responsible not only for federal income taxes, but also self-employment taxes, which cover Social Security and Medicare. Unlike W-2 employees, you don't have an employer to withhold these taxes from each and every paycheck, so that responsibility falls entirely on you. The second is quarterly tax payment requirements. Now, here's where quarterly estimated taxes come in. The IRS generally requires self-employed individuals to make estimated tax payments 4 times a year, in April, June, September, and January of the following year. These payments help you stay on track with your tax obligations and avoid hefty penalties at year end. And third, what happens if you skip quarterly payments? So, what if you decide to hold off on taking a salary, thinking you might just pay at the end of the year? Well, here's the catch. The IRS requires that taxes are paid as income is earned. If you earn income throughout the year without making quarterly payments, you'll likely face a penalty even if you pay the full amount at the end of the year. If you're a locum professional, you don't want to miss my top tips for starting and operating a locums practice. I'll pin a link in the comment section below. The fourth thing you have to consider is something called the safe harbor rule to minimize penalties. There are some exceptions. The IRS has what it's called a safe harbor rule. If you pay at least 90% of what you owe for the current year, or 100% of your prior year's tax liability through timely payments, you can potentially avoid penalties, even if your quarterly payments aren't perfectly aligned. But keep in mind, waiting until the end of the year to make a large tax payment is risky and often costly. And my last point is practical tips for all you locum physicians. For most locum physicians, making quarterly payments is the best strategy. You can estimate your taxes based on your earnings to date and use IRS Form 1040-ES to calculate each installment. Or working with a tax advisor or knowledgeable CPA can also be extremely helpful. They'll ensure your estimated payments are aligned with your unique income pattern. In summary, as a locum physician, it's best to stick to quarterly tax payments, even if you don't draw a regular salary. By doing so, you'll avoid IRS penalties and keep your tax planning organized. If you found this video podcast helpful, don't forget to like, subscribe, and check out more of the content for insights into the business side of being a locum tenens professional. Also, if you have any questions or topics you'd like me to cover, please leave them in the comment section below. Thank you for watching, and until next time, have a wonderful day. Bye.